Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 10th of September, 2018, and we're right now just after 3 p.m. Central Daylight Time. Want to wish all of our Jewish viewers out there a very happy New Year. Understand, folks, the volume was muted today in part because of the Jewish holiday. It'll get muted on the Yom Kippur holiday as well. So please remember that. Now, as for the marketplace, well, interesting day. Interesting in that the Dow is down, but most of the other stock indices are going to close in the positive area. The gold market up a little bit, silver gained on it, platinum up, and you're starting to weaken for the first time in the most bullish of the metals, the palladium market. It's starting to show the first signs of cracking and that maybe it's ready to back off. Dollar was down today and got hit especially hard when we saw that the EU negotiator, top negotiator representing the EU with the UK for the Brexit, has said that within 8 weeks they might be able to get a deal done. I have my own doubts about it. I was on TikTok and Bloomberg today saying they might lay out the framework. I seriously doubt they can get a deal done with everybody voting every which way. That's just my own take on it, but that's what I think. By the way, I want to remind you all, I'm going to be talking about my webinar that's this coming Wednesday. That's September 12th at 12:30. So stay tuned and I'll show you what you've got on that. And it's one come, one all. I have limited seating. It is free. All right. Here we go from 1353 to 1161 on a weekly chart of just closes. The market rallied and is recently just sort of hanging in here at 1195.50. The sideways action in this market is not overly impressive. The market would need to get a breakout way up here to go anywhere. And my number that I don't want to take out, if the market's going to hold on this and try to break out, is 1189.50, which is this low right there that I'm pointing to. In order to make the market go up, even from this pattern, you don't really want to take out the 1195.10 zone. You've already got the pattern of lower highs, lower lows. That would just add to the bearishness of the market, but still makes this number very important. And that number is important because it's a setup for what we call a price count. If the market's going to make a run to the upside, you want a pattern like that to go with it. If it's broken, it's out. In other words, that price count's thrown away. When you look at where the market's fighting, you tell me that 18-day average of closes that I so often talk about, the 18-day moving average of closes, isn't what the market's fighting on. It's fighting right on that number, trying to figure out what to do from there. As it's doing so, it's developing sideways action within Bollinger Bands. Now, think of Bollinger Bands, and it's an algorithm, as giving you theoretical resistance and support numbers. Got that? The first challenge of either way often results in the market stopping at that number unless you get huge volume to break it out of there. And that's what I always look for. Are we getting that big, big volume? When I look at momentum, here's what I've got. I have a downtrend. I've got a market with the swing line down. I've got a market that's trading at or under the 18-day average and momentum pointing this way as well. So until you take out now 12.1270, the bears have regained control. One of the key numbers is this 1189.50. On the ETF of gold, you have a mixed pattern here. You've got a lower low and a higher high. I don't know which way to go with that. If you take out 112, and I'm talking Friday's lows right here, 112.97, come tomorrow and stay under this 18-day average of 113.09, you would then have lower highs, lower lows under the 18-day average and momentum pointing down. That, in my opinion, is the number that the bulls have to protect, not let that market take that out. The number in the GDX, the gold miners, you're hitting the lower Bollinger Bands. The problem is you have an embedded reading. That is a very bearish chart. And this market can just run on that part. There's nothing friendly on this chart at all.
The gold-silver ratio ran into resistance here in the high 84.5 to 8,500 level, but it hasn't shown a turn. You can see that you still have a pattern of lower highs, but suddenly if we come back to this low right here, that low is 1403.50, and you would think on the chart that this break low, 1410.5, that's higher. So I have a pattern now of higher lows, lower highs. The problem is this. The market is now leaning and staying under the 20 level on the slow stochastics. It did it also on Friday. It did not do it on Thursday. If it's going to embed means you convert the market from being oversold into locking in a downtrend again. The word is again. You have to do that and keep that number there. We'll see if it does it tomorrow. It's going to be an important day. Copper's having its own problems because you have to ask yourself, gee, if we're putting all these tariffs on China, if they're retaliating against us, can that be good for trade? Now, China still saw its exports to the U.S. soar. If you took a look and you get my market letter, you know that we hit an all-time high in a trade deficit with them for last month. Pretty important. On the other hand, the overall export numbers going from 12% growth to 10%, and if the U.S. hits these other layers of export duties on them, those numbers will start shrinking and affecting their economy. So nobody can withstand this big of a trade war, including us. It'll hurt us in a way, too. In the platinum market, you tried an uptrend. You got a higher low, higher high, but you're not closing over that 18-day average of closes. The bias is down, the swing line is up, and momentum went flat. Here's a market that I'm starting to pay attention to, losing its bullishness. Got the word losing. Higher lows, yes, higher highs. The red line's now under the blue and trying to shift downward. If this market takes out 957.40, you could end up with a pattern of a higher high, lower low, momentum shift, lose the embedded reading, and it could set up an eventual test of either the 18-day average or the 100. So it's something to look at, but I think this market today marked a shift, could be temporary, against the platinum especially. In the dollar index, we have been fighting at this 18-day average. We got up to it here for a couple of days, fell away, then came back up to it the past 2 days. Is the dollar going to be bullish or bearish out of this? Well, right now it's neutral. You have higher lows and higher highs, but you're settling under the 18-day average. While momentum is still pointing up, it's not soaring to the upside. Market's in an interesting spot. Take out 94.83 and you could end up with a pattern of lower highs, lower lows under the 18-day average. And if momentum starts turning down, it could set up a break back to the 94.22 level. Get over 95.68 and the market would argue, okay, watch out, you could be headed to wherever that upper Bollinger Band is. So we're at a tricky spot on this chart, and one that I'd be paying a lot of attention to. Now, as I mentioned earlier to everybody, let me see if I can bring this up for you. My webinar, there it is. So in the webinar, I'm going to review current charts that you bring up to me, answer questions that you bring up to me. How do you get to it, though? How do you get into it? It's an invite only. So I sent last week and I sent this morning to the mailing list that I have, and I do call the mailing list your invites. If you don't find it, if it's not in your mailbox, if not in your junk mail, if it's not in your clutter, it means that you've been called out of our list. Simply call my staff. They will send you out the invite. 12:30 this coming Wednesday. And another announcement. I will not be in the office on Thursday or Friday of this week, assuming the hurricane doesn't get so bad that I can't make it to Washington, D.C., where I am going to be going over to the White House. So it should be a lot of fun for me, at least. I've been there before, but this should be very special. So in any case, I won't be here on Thursday or Friday. I'll talk to you about everything I learned when I'm there come Monday. You have a great day. I hope to see you at the webinar, and take care now.